Hello ladies and gents, in today's video it's one I've been quite excited to make. We're going to be reacting to finance TikToks. So if you're new here, my name's Ross, I'm a level 4 diploma holder in regulated financial planning. As you might be aware, TikTok's not just used for entertainment. A lot of people are actually getting a lot of education on these things as professionals in that share their knowledge to a wide audience on this platform. And a lot of young people are getting the majority of their financial education on platforms like TikTok. But of course, we can't have too much of a good thing. And while there's good actors on these platforms spreading some good education, there's also plenty of dodgy people on it as well that are just blatantly lying or promoting scams, anything like that.
Knowledge.
So today we're going to look through some and, well, we're going to see how much of it's just a load of, I was going to say a bad word there, but well, rubbish. We'll see how much rubbish there is out there. Oh, alright, in the hot tub. I wonder if there's a trading course coming here.
Because I made 20k trading.
And yep,
so.
there we go. Great.
Got the Wingstop here.
Can't disrespect Wingstop, but that's fair enough.
Oh, I low-key opened my eyes under this fucking
Alright,
water,
yeah,
so
okay.
surely I have
Right.
chlamydia in my eye now.
Great.
Anyways, good night. Buy my course.
Yep, and
when I
there
drop
it is.
so
Yep,
you can
and
just
here
gamble.
comes the
It doesn't
course.
fucking matter,
Yeah.
'cause you're
Just gamble, it's no problem.
making money.
So much money from day trading.
I think I can smell shite.
Day trading sounds brilliant, sounds easy in practice, and you've got a lot of people apparently making a lot of money doing it without providing any proof most of the time. And they're just selling courses to normally younger, more open-minded individuals. I mean, making 20 grand in 30 minutes sounds brilliant until you realise that statistically speaking, you're not going to make any money. And over the long term, you're almost certainly not going to make any money. So I'm a wee bit dubious on whether a random girl in the hot tub is cracked the code and is then able to sell you how to also do it. Who knows, maybe she's better than Warren Buffett and all that type of stuff, but
Yes, I can definitely smell shite.
So how long will it take me to replace my income via the stock market?
it's a good question to
At
know.
this crazy
A lot
idea
of
where
financial
I'm on maternity
planning
leave to
revolves
take
around
1
that.
week of my leave benefit invested in the stock market
Okay.
and use that to sell covered calls to
Oh,
try to
no.
replace my income. I just jumped in without doing any math,
That's
but now that
not
we're a month
good.
in, I've had some time to crunch the numbers
okay.
and see how long
Let's see how that's
it's
going.
going to take to actually generate enough money in premiums to replace my income.
Okay.
So the amount that I started with was $1,542, which is the maximum benefit in the state of Washington for paid family leave.
Right.
So far, I've been able to earn about a 10% return
10%
on that initial
return.
capital.
That's
But it's unrealistic to think that that amount would continue consistently week after week.
weekly returns,
So I looked
10%.
Scenarios with different amounts of returns
Oh,
each
Jesus.
week, and the fastest
Oh.
that I could potentially
Assuming
replace my
8%,
income
you know,
would
want to be modest.
31
8%
weeks.
weekly returns,
And a middle amount would be about a year.
only a year,
And if returns are very low, it would obviously extend much longer than
of
that.
course. You know,
Basically,
could be
what I
like
need
6% a
to
week,
do is
really
grow
low.
that $1,500 that I started with to somewhere between $20,000 and $30,000 in order to have enough capital to invest.
Mm-hmm. Easy
to
done. Just
earn
30
about
exit.
$1,500 a week.
20
selling
exit,
covered
you know, easy
calls.
enough.
So while this is definitely a slow
Slow.
process, it will generate
Slow
income much
process.
faster than just investing in dividend stocks or just investing in
Yeah.
the overall stock
A bit
market
slower, yeah.
in general.
Right, a bit to unpack there. For reference, the stock market historically, over more or less its lifetime, has generated a return of about 6-7%. When taking into account inflation. And that's annually. She's saying that she's going to do 10% returns weekly, which when you compound that means that annually it's going to be, what was that again, something like 14,000% annually in that case. And if she was able to do that, there'd be a lot of hedge funds paying her a lot of money to know how to do that. That is just an insane expectation to be able to get 10% returns weekly consistently. So she talks about using covered calls. I won't go too much into it, but it's basically like a derivative strategy that involves you selling options but then also buying the underlying asset. And the idea is to basically get a consistent income from the premiums of it. And it mitigates the downside risk a wee bit with having the underlying stocks and stuff like that. But that's the thing. It only covers the downside risk a wee bit. It doesn't eliminate downside risk. This strategy of hers of 10% weekly returns only works if the asset price doesn't crash and then make our options worthless. And then also obviously the assets that she holds also just sell for less. Unless you really know what you're doing, don't play with options. And even if you know what you're doing, you're probably still going to lose money anyway, so why bother?
Day 8 of a chicken trading a $100,000 funded account. After a quick chart analysis, she will be choosing how she wants to trade gold.
Probably better
First,
than most
she will
day
choose her
traders that are
trading
selling
session.
courses on here.
That's going to be New York. Next, she will
Nice.
pick her stop loss. That's going to be a $5 move.
Good,
Now
good
she will pick
conservative.
her risk to reward. Ooh, that's going to be a 1 to 2.
Oh, that's never mind.
Oh, hey,
Bounced
don't
out
worry,
there.
I'll get you another one. And to complete the trade, will she go long or short? Okay, she is going short. I'll go
shorting?
set up the trade. Here it is, the only
In case you didn't know, shorting just basically means you're wanting the stock to go down. Normally when you buy a stock or you go long, that means you want it to go up. But when you go short, you basically want it to go down because you're buying and then selling and then you plan to buy it back eventually. So you want it to go down so you can buy it back more cheaply. But yeah, so we want the chicken. The chicken wants it to go down.
only account that matters. She currently has $1,000 profit and will be risking $1,000 to potentially gain $2,000. And this is the trade setup. So if the
Is that
price
2
of
to
gold
1?
goes up $5, she will lose the trade. But if it drops $10, she will win the trade. There is no way a chicken can win a 1 to 2 risk to reward trade setup. But rules are rules. Disclaimer, this is not financial advice. If the chicken wins,
Wouldn't
do not
necessarily
buy
say
one for
that,
yourself
yeah.
to trade with. These birds
Don't want to
must
count
surely
your
be
chickens
released
before they hatch, am I right?
or bankrupt.
Oh, brother, this guy stinks!
The trade is done, and
Ah,
we're going to keep it
that was
100.
terrible.
It's a disaster because this chicken
Oh, no.
traded way better.
Oh wait,
than I
oh
did
there
this
it
week.
is. There it is. There you go. So you see the stocks went
This
down
bird is now worth
$2,000.
$3,000. That's more money than I used to make in a month. She hit her
Jeez,
target
oh.
for the payout. Profits are locked and loaded. Let's go.
Well, great video. Really does highlight that day trading is indeed that easy. Even a chicken can do it. Jokes aside, I hope that does highlight that, again, you film enough times, you can make anyone a winning trader. I can guarantee that chicken probably has as good or better day trading results than some of the people in this video going into day trading. Just clearly all you need to do is get yourself a cock and you'll do quite all right.
I want to share with you
Right,
every
on to the
single account that
next.
I currently use as a guy that talks about money a lot on the internet. Firstly, my current account, it's with Barclays.
Good
It
start.
doesn't matter who it is, you just have to be happy, but money comes in and out from that. I don't store money
Every day
inside of it.
spending
Number
money.
2, my emergency fund. This is 3 months put aside in case of an emergency.
Good,
It's
good,
simply
good,
there for
good.
that, nothing else. Number 3,
Good measure.
I have a
3 to
cash
6
ISA.
months is
It's
normal,
currently
right?
with Trading 212 because they had the best interest rate at the time. But again, this is my short-term savings for specific goals I have in less than 5 years. Number
Alright,
4,
that's
my
good.
stocks and
That's
shares
good.
ISA.
Clarified that
Also
there.
currently with Trading 212, and these are my long-term investments. I am not touching this money for
Yeah,
5,
it's good,
10, 15
good.
years, but the longer the better. Next, I have a pension. Well, in my
The
case,
pension.
I'm self-employed, so I've got a SIP, which is a self-employed personal pension, and I contribute roughly
Self-invested
10 to
personal
15% of
pension,
my salary
but
into that every
that's been picky.
single month. Next, I've got a credit card. I use Amex, and this is where I do my day-to-day spending, but I make sure I pay it off in full every single month.
Yep,
'cause if you
direct
don't, they are
debit,
not
just
worth
don't even
the
think about
plastic
it.
They are printed on. Next,
Do not want
a
credit
travel
card debt.
card. This is a card where I don't pay any fees, and I pay the live interbank rate whenever I want to spend abroad.
Good
This
for
is
going
really
abroad,
important to
yeah.
have if you travel a lot, or even if you travel a little, because who wants to pay
Good.
fees that they didn't need to in the first place? 7, not really a financial account, but I have a budgeting app. It just plugs in all of the other accounts that I've just mentioned to you, and it
Less
automatically
friction, if that
categorizes
suits
what I
you.
spend and gives me a
Go
rough
for it.
idea of where my money's going. It's the easiest way to budget. Number 8, premium bonds. I don't really love premium bonds, but I just have like a little bit just in case. For the bulk
Actually,
of my savings, they are in cash
think-
ISAs. Because
I would
just
prefer
not
these
how
personally,
much interest I'm
not
getting
financial
paid
advice,
to a lot
but
of
I'd
the stock
prefer
system. And lastly,
premium
a business
bonds
bank
to
account.
cash
For any of you
ISAs.
that are wanting to set up a business or currently running a business and managing all
And
your
business
finances
account,
from
right,
your
we can
personal
stop it there.
account.
Right, so yeah, for the most part, it's a good outline. Well, it's just all the basic accounts that one can open. Things to point out, having an emergency fund, very important. All it takes is your boiler breaking or your car failing your MOT, if you don't have that cash put aside and you're taking out debts or you've got stuff to pay and then you suddenly have this big one that also comes on board, you're going to be struggling. So believe me, you would much rather have this and not need it than need it and not have it. With other ones, mentions ISAs, cash ISA, specifically for short-term goals. That's good. If you've got something you want to buy, say like a house deposit, or again, you're wanting to get some other, I don't know, bigger expense, there's merit to having it in something like a cash ISA, so that instead of market volatility possibly moving the value about and making it so you can no longer buy at the time of purchase. And then for longer term stuff, as you said, stocks and shares, can't really go wrong there. Just wide, diversified, not specific stocks, not worth the research. You're probably going to be wrong anyway. Premium bonds he mentions, less known about. They're an alternative to cash ISAs in my eyes, in the sense of you buy them from the government, so they're about as safe as you can get. If the government can't pay you it back, well, there's probably bigger problems going on in the society. Basically, instead of an interest rate, it's a lottery system. So for how much you own, you get more tickets basically, and then you get prizes paid out. And the prizes can get really, really high. So if you feel lucky, you know, it's good to know. I actually personally like them more than cash ISAs, I think, for emergency funds, but to each their own. So yeah, overall, pretty solid video.
Now you know this guy's onto something. If you
Is
believe
this a
like
crypto
I
one?
do that blue chip crypto always goes up over time,
Blue chip crypto.
then this is a great strategy. Borrow
Oh,
money
Jesus.
at a low interest rate, plow it all into crypto.
Okay.
Only two things
Yeah,
can
no
happen.
risk there.
It'll go
No
up
risk.
or it'll go down.
Up
And the rate
or
that
down. Ooh,
crypto
it can
goes
go
up
down?
is to the moon. You can more than take out a
Oh,
tiny
Jesus.
bit each month
I
to
wonder
make
who
your
wrote the
monthly
script.
interest payments. And meanwhile, you're using that free money to grow your crypto. Now,
Oh,
what happens
Jesus.
if crypto tanks for a while? No problem.
Good
Sell
question.
a tiny bit of your crypto to make your monthly interest payments. Either way, over time, your crypto should appreciate, be able to cover all of your loan costs, and leverage to make you more money than just your cash. This, my friends, is how the billionaires do it. Other people's money. I love getting rich together, and that's a great comment.
Yep, that's... Alright, Jizo.
There's a bubble. How do you know? Trust me.
Quite a lot going on there. I don't know if I've heard the term blue chip crypto before. It's pretty funny. They're getting quite good at marketing, but I assume it means blue chip crypto, meaning bigger ones. So it's going to be like your Bitcoin, for example, your bigger, less volatile cryptos. And when I say less volatile, obviously crypto baseline is extremely volatile relative to, you know, even equities, which were considered relatively volatile assets. So in this video, he's basically saying to buy a bunch of crypto, take out a bunch of loans to then also buy even more crypto. And if you make enough money off of the crypto, as it's going up more than it's not, according to him, then you're able to pay back the loans. Of course, the glaring problem, which he does attempt to address, is that if the crypto goes down and you still need to pay back the loans, you're going to need to sell a bit of your crypto. And he said, because it's going up so fast, you can just sell a wee bit and you'll be able to pay it back, no problem. It only goes down a little bit until it doesn't. We've seen crypto swing large percentages, more than 50% in like a couple months. If that happens and you've got a lot of personal loans outstanding for this stuff, you're going to be underwater really quickly. And out with the financial thing, even if it's able to recover, the amount of stress that you're going to be under in that situation is ridiculous. And yeah, just don't do crypto. If you want to do crypto, if you're willing to take the risk, you know what you're getting into, go for it. Just maybe don't take out a bunch of loans to then buy it. Okay, next one.
For 10, almost 11
more
years
day,
now, and every single
more
time,
day trading.
This doesn't get
Oh shit. Here we go again.
old. It still fascinates me every single time to see how price respects these lines.
Technical
is
analysis.
just ridiculous. Every time I'm like, okay, this upward trend line was drawn weeks ago. Just simply using this
I mean,
last
you could
touch point
draw
and
a lot
much
more lines
higher
than
time
that.
frame point. This is just, it's mind blowing. This trend line here started back in May
Right.
this year.
I need before I get more angry. So what she's doing here is called technical analysis. Basically, you attempt to decipher the stocks and you basically using pattern recognition to be able to predict stock movements. And then obviously if you can predict them, you can then make money off of them. The big problem is that more or less all the research that's been done into this, over the long term, this just doesn't work. If it was literally a matter of drawing some lines on the graph, again, everybody would do it. It would be so easy. And also, you just wouldn't tell anyone. You would, it's just, like, to highlight my point here, I'm going to superimpose over hers, but she's drawn some trend lines here and they're doing resistance level trading. So basically, the idea behind it is that you see basically points that it's bouncing on, or again, you're just drawing lines between lows and highs. And based on that, you then try and predict the thing. But the issue you might be able to see right away here is that there's a lot of points you can draw these lines from that if you just, like in hindsight, this looks good. It looks like it's smart, sound, following a pattern type of thing. Throw enough darts at a dartboard, you're going to hit a bullseye eventually, or you would think. But the problem is you can draw these lines in hindsight so easily.
It's the biggest piece of dog shit that I have ever heard. Everyone's laughing, by the way, but it's true because everybody's heard it too. Everyone heard it, right? They look at all, everyone's like, yeah, big piece of dog shit.
Moving forward, there's no guarantee that it's going to stick to this pattern. And more times than not, it doesn't. And this is how most of these trading gurus and stuff just sell you on these things, because they show you these super simple setups and people are like, yeah, I can learn that, it can't be that hard. And then they go and do it, and then they might get a wee bit of luck off the bat, maybe they get lucky. More times than not, within half a year, they're going to be bust and have lost a fair amount of money. So just be careful with this stuff out there. Like, don't believe everything you see.
I'm on track to retire with 2.7 million in my late 40s. Here are
That's
my
a
5
lot to
tips
have in your
help you
40s.
get there. First, get out of the default pension fund.
Yes,
I'm going to bet
yes.
you have no idea what your pension is invested in, which is not good because it's probably the largest pot of money you'll ever
Normally
have
true.
in your life. You need to make sure your pension is working hard for you, and by default, it'll be in an average fund giving you mediocre returns. Instead, go for a 100% stocks global diversified index fund. If you're young, you're in the wealth accumulation phase of your life, which means you should be in high risk assets for that growth. Second, and it might sound
Was it there? Yeah. Good advice. Most people don't realise what their pensions are invested in. It's definitely worthwhile going and having a look to see what you're invested in, and more than likely or not reallocate it. Especially if you're young, you can afford the risk in the long term, more times than not. Well, a more heavy equity weighted fund over the long term, more stocks, but just again, make sure it's very well diversified. Just your simple Vanguard tracker fund is going to be more than fine for that, as opposed to some fund with 50% bonds that's barely going to beat inflation over the long term.
Right, but you need to put more money in your pension, but it doesn't have to be a lot. Remember, putting £100 in your pension doesn't actually cost you £100. For most people, it will reduce the amount of tax they pay.
Does
so
try.
actually, the take-home pay isn't even
save more, you'll have more.
And if your employer matches your pension, you only need to put in £50.
That's the big bit.
£50 from your employer. So the difference.
Bear in mind with your employers,
Third,
if there's a match, you're basically getting 100% return right away.
Stocks and shares ISA and start building a second pension there, one that you can access whenever you choose. You can invest in the same diversified index funds and ETFs as your pension, but this is the money that you'll use as a bridge for retirement. Fourth, and I'm going to assume here that you know.
I'll just pause it there because I imagine he just yaps on about the ISA. But yeah, another good point. You can't access your pension till you're at a certain age. It's normally 10 years before your state pension age, or at least at the time of the video. So at the moment it's 56 and it will become 57 next year. So if you want to retire before that, you're going to need something like a stocks and shares ISA that will basically bridge the gap between you being able to access your pension and then being able to live off of that. So yeah, good video. Right, we'll make this the last one. Oh Jesus, we'll finish on this. I know this guy, bloody real estate educator. He's a...
what I need for retirement, but no one's doing the math. And here's what the math says.
He's a word I can't say.
The 30-year average
or shouldn't say.
401k. The 30-year average in an IRA. Do you know roughly over 30 years what the average every year is earned in ROI?
I do not.
It's 5%.
That's just
The reason
not...
why that's poo
Well, I guess if
is
there's
because
cash
you take
involved, that might be.
$50,000, right?
If it's invested all in stocks, it's going to be like 7-8% after inflation.
And ask what happens to it in a 401k over 20 years. It triples. It becomes $160,000. Now, on the one hand, someone might say that's pretty impressive. And I'm like, yeah, but did you know in the 60s, the average person's 401k and IRA is 200 grand? And at age 55, you've topped off your income at $94,000, which means that at retirement, you've saved 2 years worth of money. So after you have cut your expenses in half, you can maybe go 4 years before it's all dried up. It's poop again.
I thought you said let's do the math.
That's what happens, and it's not about the 401k. It's the 5% that we get brainwashed is good because it's a safe number, and we.
I would admit that 5% might be a wee bit low over the long term,
we know how
but
the story ends for 99.9% of people.
it's far from bad. All right, okay, right. Before we go into it, I know who the guy is. I've seen his videos before. He's basically like a real estate investor, educator. It's exactly what you think. He sells a bunch of courses.
Here in my garage, just bought this new Lamborghini here.
To his point, he says 5% return. Maybe if you've got like a higher weighting in cash assets, fixed interest, like bonds, you might expect to see that return. In reality, if you've got a higher equity weighting, again, assuming globally diversified, that's probably going to be closer to 7 to 8% in the long run. So again, same 5% is kind of cut it a bit short. Also, he mentions 401ks, which is basically the equivalent of pensions in the UK. He's completely forgetting the fact that you would get, or you would likely get, an employer match on top of that. So realistically, it's not 5% you're getting, you're instantly doubling that right off the bat. You put in £100, your employer puts in £100. That's a 100% gain right off the rip. You're not going to get much safer returns than that anywhere else. So again, you just left that bit out. Not to mention that that 50k is assuming there's no other money going into it being saved over the course of them 30 years that it's been saved. So again, it's just, when you've got people saying and putting down the methods that have made the majority of people that have done them well over the long term and have done for more or less from the time that they've existed, just take it with a pinch of salt, do a bit of research, and you'll find out that these people are just charlatans and frankly just dicks. Like, I think that's a good place to stop it. So if you've enjoyed the video, be sure to leave a like and subscribe, and comment down below if you've enjoyed this type of format and if you'd like to see more. Plenty more people on TikTok, I'm sure, are giving out dodgy financial advice, we'll say. And obviously there's other avenues like Reddit and Twitter or X that I could react to as well. So comment down below if you want to see more of it. And with that, again, thanks for watching.